Eurozone finance ministers postpone its meeting on Greece while the country waits for approval of its next big bailout. China promises to keep buying euro assets, and in the U.S., Congress agrees on a tentative deal to extend the payroll tax cuts. I'm Alix Steel, and the Morning Call starts right now.
Good morning, I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alix Steel with TheStreet, and together we bring you the Morning Call. We had stocks rallying into the close yesterday, and they seem to be extending those gains today, helped by China buying euro assets here, and also helped by some uncertainty in Congress being taken away over the payroll tax cut. Are we looking at 1370 this week?
At this point, we're opening above the most recent resistance, with that 1353 to 1354 that the market's grappled with over the course of the past 4 or 5 days. Now, you mentioned yesterday that nice rally into the end of the day. It was nice for the bulls. For some traders who are actually thinking that this could be the start of a pull-in, they definitely got squeezed into the close, and it wasn't easy.
We're looking at more of a short squeeze today too, then, you think?
If they didn't cover. I know for me, I definitely had some more shorts on, and when we had that last 20-minute buy program, I covered the majority of my hedges, and I'm like 75 net long now, so I'm excited about this open. The question is, can we see some commitment in the first 60 minutes or so to then get us that push to that 1370 a little later this week?
Let's look at the chart to just double check those levels we've been looking at all week.
Yes, you have to look at this uptrend. This uptrend right now has been so methodical and so actually accelerated. So go to the chart and you will see, here's the gradual one. I like to point it out just to show you how the macro investors, you guys have not even had it to worry because we haven't even tested this uptrend. For the momentum investor, where this accelerated uptrend started, you had a few little days that it looked like we were going to, close weak, but every single time we tried to close below the 10-day, they came and supported it. Close below the 10-day, they came and they bought it. Yesterday, it looked as if we were going to close on it. They came and they bought it. So until that trend changes, you got to stay with it. And at this particular point, here's resistance of the past week. Here's your 1355. Looks like we're opening above it. We see some commitment for 30 to 60 minutes. And then that level you were just mentioning here, that 1370, that is the next point of reference that traders will be watching.
Two things. One, options expiration on Friday, so it could provide a little bit of a headwind there. But also Greece. Is the Greece risk actually out of the market now? I was surprised because most portfolio managers, most traders like you've said are like, yeah, it's done, it's over. But I read a note yesterday from Societe Generale that was saying actually there is near-term risk here. The Eurozone meeting has been moved to Monday. The private bondholder deal has not been worked out, and there are a lot of worries that perhaps with a new government in the elections in April that there actually won't be implementation of the austerity measures. So do you think it's really baked in?
I think it is. I think there's such Greece fatigue. I don't even read the headlines anymore about Greece. I'm like, were they bailed out? Weren't they bailed out? What's going on here? Why are the futures up? Why are the futures down? It's just, we want to see, I think the market gets worried about new headlines. And right now, the old headlines, I feel like they're baked in. And if we see some normal headlines, which like today we're seeing, the market's going to continue higher. Then every time we get a new headline that might be a bit disturbing, we'll have to see what level holds and see if this accelerated uptrend stays intact, because it has since that December 20th gap and go.
And we keep talking about rotation. It's more of a stock specific rather than sector specific. But I was reading a note from Morgan Stanley that said that there's been strong fund inflows recently into emerging market funds last week by about 5.8 billion, highest level since October 2010. Okay, I get to thinking. So does that mean we're looking at cyclicals? Are we looking at industrials? Are we looking at energy? Are these the sectors within the stocks we're looking at we need to really focus on?
I think all of them have been going up very well this year. In the beginning, remember in December, we're like our 2012, just the emerging markets to look at were India and China big cap, and both are up huge. If they continue, then I guess we could look at the continued strength in the materials, in some of the refiners, in some, of the other sectors. But for now, really technology to me is where the action is. That's what's been getting the momentum. If you look here at the chart of the Qs, you will see, the Qs already took out that this is, I just showed you the October high of the S&P at 1370. Look where the Qs are. The Qs didn't even wait. They're firing ahead. And look, I know this is a big move, but all in all, it's still acting very well. These mega caps and these stocks have such low PEs and a lot of cash that it can continue. This didn't even touch the 10-day moving average.
How much of that is Apple weighted? Do you know? I mean, how much of that is due to Apple or really due to the sector as a whole?
I think it's the leading horse, but it's not necessarily all of it. And when Apple maybe puts its short-term top in, who Who knows if that's at 520 or 540? Maybe tech gets a rest, but other technology is doing well. The semis are doing okay. Cloud computing is doing great. The other, high beta names are a little wishy-washy, but I don't think it's all Apple. It's a great thing to watch, and you can get lulled to sleep by watching it, but they haven't been selling these stocks underneath the surface with Apple.
All right, so definitely some more room there. So then talking about the other cyclicals we were discussing, so if we go to energy, say the OIHs, I was talking to a trader at the NYMEX yesterday who said any headline out of Iran, any kind of saber rattling, any issue with Israel, and oil is going to spike up $2 hands down. And I wonder if the OIHs are showing that kind of volatility or if they're kind of petering out.
The OAHs have been a great hold. They've been an accumulation type of strategy since December. If you look at the chart here of this inverted head and shoulders pattern, we've talked about it so many times, this being the left shoulder, this being the head. Here's this descending channel. When Jim did it on Mad Money off the charts, this was buy number 1 at the time. It just split 3 for 1, so the numbers are different, but here it was in the chart. Here's your tier 2. And now this is, to me, is getting very juicy. I'm in a tier, I would say 1.5. We start getting above 43.80, 44 with some volume. I'm going to increase my macro position for a momentum position, which could take us pretty quickly to 46 to 48. Now, if we get that Iran situation and oil spikes, I'm not sure how the OH is going to handle it because Stephanie's talked about as long as oil's above 90, it's cool that they continue to make money, and sometimes this group moves with the price of oil. But I would say if oil goes up, it's going to psychologically go up with it. But then if it gets too extreme, then the markets are going to get a little worried. And I think that extreme price for oil is probably 115 or higher. I
think the trader was actually talking to 103 at this point. He thought a really short-term bump. But anyway, all right, let's go to the industrials, the XLI. So we have Empire manufacturing data coming later this morning, expected to rise to a 10-month high. We also have manufacturing unemployment has its strongest job run of growth since 1998. I mean, these are pretty good, substantial underlying factors here, but what's the chart doing?
Chart looks good. Chart's been pretty methodical. It's outperformed. It's actually the upper end compared to like the refiners, which are still trying to get through some resistance. So they look good, a good spot. If you look here, you'll see that it also has had a nice methodical move. When it broke above this level, which was about 35, it's had a nice move. It's just consolidated, went sideways. It's still above the 10-day like everything else. And then it's coming into some resistance. So the next real level here is 39, but it's already eaten through this whole level here. So I do think you could stay with the industrials and stick with the best names you like.
And then let's go to the XLF, because you also brought that up as maybe not holding up that well yesterday. But I was talking to Stephanie Link, Director of Research for TheStreet, who actually added a bank name. Won't tell you which one. You're going to have to check out TheStreet for it. But I wonder if this is where PMs start to sort of nibble a little bit, and if how supportive that's going to be.
In the beginning of the year, we talked about the financials being a potential January effect, that you can get a good bump in them, nice percentage gains, and they actually went further, showing you that there's some power here so that it's more than just a trade. So you're going to get pull-in. So if Stephanie bought on a pull-in, that's the way you create alpha, especially if they continue. So if you look here, at the XLF, no big deal. You had a few different levels here, a few different moves. This is when you could have had your core trade, went all the way up, and it failed right at this old resistance. But I wouldn't even say failed. I would say pause. Okay, it did all. It's not as strong as the other two groups I just showed you. As you can see here, let me just get you a little closer look here. You will see that it actually gave up the 10-day. But it did hold support. It filled this gap with a bit more sideways action, and it could absorb this big move. I do think the XLFs could help, could go higher, and I do like some stocks in that group as well.
And then last up, want to check in on the housing sector. We have a lot of data coming out tomorrow. Housing starts really driven by those multifamily housing units. We have permits, which are expected to be up 1.3%. We're also going to get a read on delinquencies, which could be a window into foreclosures or not. Is there a support level we need to be watching here in case the data disappoints, like retail did yesterday?
This group has been unbelievable. It's gone further than anyone would have thought, and this really could be a great indication for the overall stock market, because some thought it would get a bounce. This is so powerful that sometimes it indicates an actual turn in the economy. So if the housing group is indicating a turn in the actual housing market, that'll be unbelievable for the economy and really good for the stock market. As far as the chart, it still continues higher. You have a nice upper flag here. So if you take a look, there you go, nice and tight, absorbing this last big move from just say 1750. If this group goes above, 2040, you're going to see another move. And if you look at the monthly chart, it's at a key level, but it still has some room here. It's still looking good, and it's still on its way. Next spot, macro-wise, I would say is about 25 here on this indice.
Really quickly, just in case it disappoints, though, what's the support?
Well, we'll watch the moving averages. See the 10-day, the 21-day. As of now, no group has broken their 21-day moving average. Even the weaker groups held them. So until that changes, you have to stay with with the current trend, and we'll see when a composure change happens. It hasn't happened yet.
All right, and we're going to be right back with some more ways to make some cash today, in particular with some mega cap tech, so stay with us.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
All right, let's get into some mega cap tech names. I want to start with two that Buffett likes, IBM, Intel. We just learned yesterday through the 13F filings that he added to those positions in the fourth quarter. Are we going to get the typical Buffett effect now? Are we going to get a rush into these two names, or is this kind of like a good sell signal today?
Well, IBM was the first one you uncovered last year, and it really hasn't done much since. I like the setup here if you're an investor.
It did get a nice bounce after they found out, right?
Like not severe where it went to highs, but it's looking good. And if you look right here, you look at this chart, IBM to me could set up a momentum trade. If you're an investor, they came out last quarter, they squashed some of the secrets or the people that were saying that they might miss, like Oracle anyway. Above this 194.50, I think that this IBM will be on its road to the 200 number. As far as Intel, I think that's the first time we talked about that. This stock has been getting a lot more respect. This was a nice little breakout when it broke above resistance. It's now flagging very, very tight. I'm not in Intel, but if it starts getting above 27, I think I'll get in there for a trade. I do think that this could see above 30 this year.
And what about Microsoft? Is it showing the same kind of potential? I mean, if you look at, say, Yahoo, still struggling, working on this Alibaba deal, seems to be falling through. I mean, are we going to see another Microsoft Yahoo rumor start hitting the tape? Is Microsoft kind of interested in that at all, you think?
I think they should run out of town and not even consider Yahoo. But anyway, the stock's been acting much better on Bloomberg, where you're going. We talked about Microsoft getting frisky about a month ago. If you look at the chart here, I'll show you why. This is when it broke this downtrend. You haven't seen Microsoft break a downtrend like this in a long time. Quick move to 31. I want to show you this monthly chart on Microsoft. This stock has done absolutely nothing since 2000, okay, and it's just starting to go. I do think that Microsoft can get to 35, and really there's an out of sequence chance it can get to almost 40 this year, so there's still some room left in Microsoft.
So buying here?
For momentum, let me go back to the daily chart real quickly and just show you. It just had its first pullback. So as long as it holds above this, just say like 30 area, goes sideways, momentum will come back in when it could clear this 30.80 level. So I do think buying into this support is better than chasing the excitement on Microsoft.
And rounding out here, I want to go to Cisco. Issued an updated forecast yesterday on mobile internet traffic from 2011 to 2016. Expects an 18-fold increase. Also predicts mobile users are going to shift over from streaming to the cloud. That's not so good for Netflix, I gotta say, by the way. But this is also really good for the Ciscos of the world.
I think Cisco is finally starting to get some institutional support. They had a few misfires last year with their quarters. It's been a few different types of trade. Under 16, we talked about it as a value trade. Above 19, if you look at the chart here, you'll see this was the momentum level that I talked about. Gave you a nice push, retest. Even on earnings, they tried to sell it down and took it in stride. I think that it's a slow, methodical trade. If you want to put some money to work, I think Cisco will be fine longer term.
All right, let's go to some quick ways you might want to make some cash. Got to hit on Apple again at new highs. You called for 520 before the end of the week, before that options expiration. You playing it for that, or are you taking some off the table?
Unfortunately, I took it off the table already.
Okay.
So it could go there, and hopefully if you're riding it, congratulations. Every sale on Apple's been a bad one. Just be careful that a lot of strikes are being bought for bullish, so sometimes going into Friday they pull it in a little bit so everyone doesn't win. So if you're in a lot of profits as a short-term trader, take it in Apple. If you're a macro investor, close your eyes. This thing could see a lot higher prices this year.
All right, and Celgene, you said yesterday you think that has a little bit more juice. Do you still think that?
I am in Celgene, and I might add here above 74.50. Look at this chart. Looks beautiful. It's holding higher. It clears this 74.50. You probably get some nice momentum. I'm in there, and I like it.
What about Zynga? It was up 7% yesterday. Top Wall Street's estimates for earnings made 5 cents a share on revenue of over 311 million. Guided higher for 2012. Honestly, that just shows how much power Facebook has if Zynga can actually make that much money.
I think that they're trying to sell it down a little bit. This stock, I think, has a big future. Look to buy a dip here. I actually went long some calls into the earnings, which are probably going to be worthless. Big deal. At least it's not, the risk is premium paid. You look at the chart, it had a big move. So, at this particular point, it had to be blockbuster, which it was good, not blockbuster. I'd say 12.50 would be very important to see if this holds here. This is the dip I would say to buy.
Do you think this is still just a trading vehicle?
Pretty much, unless
Yeah.
you have a really long-term time horizon. For me, it's just a trading vehicle. But I do know some institutions that are buying it. They're going to accumulate it, and they think in the next few years it's a lot higher.
All right, Caterpillar up 24% this year, has 4 buys, 1 hold. Excuse me, other way around. 4 holds, 1 buy. Is it time to relax a little bit here?
I think it's been consolidating. I'm long Caterpillar. I think above 114.60. Finally, this gets a nice stretch to about 117. If you're an investor, stay the course.
And then talking about cloud, let's round it out with VMware. As a reminder, revenue climbed 27% in the 4th quarter. Is it hitting up against some key levels here?
Let's take a quick look at VMW because I talked about this a few times. Here are the last 2. Okay, this was a nice tight pattern. I was buying it above 93, and then I think I bought a little bit more of 96. I did sell some yesterday. I am flat VMW. I've been long it for a few days. That was my trade, but it can continue higher if you're a macro investor. Stay the course. For me, when things were kind of getting a little hairy yesterday, you know, in the end of the day, I tried to pare some things down, and VMW, unfortunately, was one of those things that I pared down into this resistance, so we'll have to revisit.
All right, well, that's it for us for today, and that's it for my last show. I'm going to throw it over to you now, Scott.
That's it for us today, and unfortunately, this is it for us for a long time. Not forever, because I'm going to come visit you as a guest on Bloomberg. My friend Alex here, I have to wish her congratulations. She's going to Bloomberg TV. She's getting a big job over there. You know, I'm going to miss her, so I feel a little selfish that I say I'm upset about it, but I'm happy for her. She's helped build Morning Call. You've brought an aspect to this show that's made a lot of investors a lot of money, and even more important than that, it's, you know, she's been a great friend. Nice to wake up every morning to a smiling face and someone who's easy to deal with. Who, you know, had a cradle a few times here and there, but all in all, she's been unbelievable, and she's a great friend, and I wish you the best of luck at Bloomberg TV.
Thank you, Scott. I really appreciate it. So tune in to all those things, The Street, T3, and Bloomberg TV, and I will definitely miss you guys and definitely miss you, Scott. It's been a real blast doing this show. And that's it. So have a great trading, everybody. Happy Wednesday.